Hey guys, welcome to our channel Tech Cool. Today in this video we will talk about what is financing activities. uh, this article is for information purpose. This content is not legal advice. It is expression of the author and has not been evaluated by legal Zoom for accuracy or change of law. Business must maintain funding to serve and grow financing activities or the flow of cash and form lender and owners provide insight into a company financial health and capital management. Businesses track the changes in their cash over a given period using cash flow statement. A cash flow statement includes three sections: operating activities, investing activities, and financing activities. The financing activities cash flow section shows how a business raised fund and returned the money to lender and owner. uh, this section only include financing activities. Explain financing activities. Financing activities are transactions between a business and its lender and owner to acquire or return resources. In other words, financing activities funds the company repay lender and provide owners with a return on investment. Financing activities includes issuing and repurchasing equity, borrowing and repaying short-term and long-term debt. This activity includes principal payment to lender and vendor for most capital purchases, as well as the cost to issue the interest payment or operating activities. Not finance activities. Transaction with vendor for all other purchases including operating leisure are also operating activities. Paying dividends, other contribution from or distributions to owners. Cash flow for financing activities only tracks financing activities involving cash and owner contributing a piece of land is an example of non-cash financing activity. What cash flow for financing activity reveals about a business? Contexts are crucial when analyzing cash flow for financing activities. Savvy owner and manager ensure that cash flow from financing activities match their business unique needs. A positive cash flow from financing activities shows that a business raised more cash than it returned to lender and owner. This activity may or may not indicated effective capital management depending on the specific business circumstances. How to calculate cash flow for financing activity? Calculate cash flow from financing activity for a given period using a simple formula. Take a cash flow, take a cash received from issuing equity and debt, subtract cash paid to repurchases equity and debt, and then subtract fund paid as dividends to calculate cash flow from the financing activities. ABC company cash flow financing activities are common stock issue to $200,000, note payable issued, note payable repaid, dividend paid, and net cash from financing.